Everyone, my name is Shahroz Buhari. I'm the CEO and the founder of Built Technologies. So in today's video is very important. This is the sequence of my series in which I'm going to teach everyone about the trading. I have a 6-year experience in Forex trading, crypto trading, and stock trading. I work as a relationship manager, as a trader, as a retail manager, as well as a country manager in different broker. And I also developed my own company, Built Technologies, where I work as a master IB, country IB. I also know about the trading, how trade works, and I also know about the operation of the broker and how broker operates and how we will get the profit, how the trade works, what is the basics and what is the behind the scenes of that trade. So in today's video, I will teach you 2 basic skills about the trading. If you are new at trading, or if you are also doing trading for any year, if you're doing trading for any long, you need to learn 2 basic skills if you want to become a successful trader. What happens when the new person joined the trading? When the new person joined the trading, it will get some sort of knowledge, some little knowledge from the relationship manager of that broker. They will just teach them about the basics of how the chart works. The green candle will indicate the market is going up. The red candle will indicate market is going down. So whenever the market is making green candle, you go for the buy trade. This is so basic and this is nonsense which they teach the newcomer. The basic 2 things which everyone need to understand is, first is fundamental analysis and the second thing is technical analysis. I will teach you all deep things, all details about those 2 analysis. Let me start from the fundamental analysis. What is the fundamental analysis? Basically, the fundamental analysis is the analysis which you will get from the data in the news of that specific instrument. I will share you with the I will show you my screen where you will get. For example, if you are performing in any kind of trade, either it is Forex trading or crypto trading or stock trading. For example, if you're performing trade on Bitcoin, because Bitcoin is in fashion these days. So for Bitcoin, what is fundamental analysis? If you're performing a fundamental analysis for Bitcoin, you have to learn about the basic knowledge about the Bitcoin, what Bitcoin is, how the blockchain works, what is the importance of Bitcoin in cryptocurrencies. These are the basics which you need to learn about any kind of coin or any instrument or any indices which you are willing to trade. This is the first thing. The second thing, when you learn about the basics and the structure of that specific coin or that specific instrument, then you need to learn or read on daily basis about the upcoming news of that coin. For example, if I'm performing any trade on Bitcoin, I will go on investing.com or Bloomberg or any other website, or just type on Google about the latest news about the Bitcoin. So that news will give me the indication, that prediction, that if the good news come, if any positive news come about the Bitcoin, for example, if the news come that any big country or any big company is going to accept or going to start holding Bitcoin or buy that millions of Bitcoin. So that news indicates me this is the positive news. So the market will act positively. So the price of Bitcoin will go up, because market will work in the ratio of demand and supply. Whenever the demand is high and the supply is low, the price will go up. And whenever the demand is low and supply is very high, price will go down. So when any good news comes, that means that demand of Bitcoin is going to increase. So the price of Bitcoin will also increase. This is the fundamental analysis. I will go to the news, I will read the basics, I will follow all major players which can play an important part in the price of Bitcoin on Twitter or any social media platform. I follow their trends, their tweets or their messages. So those messages, those news, those data will impact the market and can give you the 30% prediction of your incoming trade. And after doing that much research and after performing the fundamental analysis, the second thing which you need to do is the technical analysis is very important, and technical analysis can give you 70% of the valid price prediction of any coin or any specific indices. So for the technical analysis, I go on the chart, open the chart of Bitcoin. This is the chart, expand it. So this is the simple chart. I didn't apply any kind of indicator. I didn't apply any kind of, you can say, instrument right now. So you have to, first of all, this is the chart, and chart can give you some sort of knowledge. If you can see, you have the knowledge that if the market is making this is the top level of market, this is the peak of the candle, and this is the close of the candle. If the candle is green colored, that means this candle is a candle of buy, bullish market. According to this candle, market is going up. If any negative or any red candle appears, that indicate you that market is going down. There is a downward trend coming. So what is technical analysis? Basically, technical analysis is the analysis in which you use the previous data from the market, and predict that on that specific. For an example, if you are doing technical analysis, you get the data of previous point of the market. For an example, this point of the market, and you can see on that specific time or month ago, market is moving around that same point, and how the market react, and how market get resistance or support, it makes the buy trend or sell trend. So by using the previous market data, you can get more efficient and more perfect knowledge, or more important and more, you can say, specific knowledge about the next prediction of your trade. For an example, first indicator which I love to use, most of the time people use so many indicators. There are hundreds and thousands of indicators which you can use, but using all those indicators will not give you that much information, because you can't learn and you can't study all indicators at once. So little indicators, more powerful indicators. Some indicators are more efficient than using different hundreds of indicators. I use just 3 or 4 indicators which can give me 70 to 80% perfect prediction about the market. So the first and basic indicator which I use is Bollinger Band. Basically has 3 lines. The first line is the lower below line, the second line is in the middle, and the third line is in the top. So Bollinger Band, the nature of Bollinger Band will work around the support and the resistance level of the market. For an example, if you throw a tennis ball to the ground, if once the tennis ball hit the ground, it will get support from the ground, and it will bounce back and touch the roof level. So it get the resistance from the roof. Roof will act as a resistance, and it will push that tennis ball back. The same thing apply in the Bollinger Band. Whenever you see the market is moving around the below line, the most below line of the Bollinger Band, that means this line is acting as a support level for the market. Whenever the market is moving on that, because market is a tug of war between buyers and sellers. If the buyers are more powerful, market will go up. If the sellers are more powerful, market will go down. What that line indicates you, whenever the market is moving around that line, you will get the indication that in this level market is getting support from the buyers, and those buyers will push the market upwards, and market will go up. So when you can predict that thing, you have to, for an example, if the first candle, this candle touched the Bollinger Band, or touch this level of Bollinger Band, you don't need to rush. Sometimes it will break at that point. Sellers are in more powerful than the buyers. So you have to wait for another candle to appear. For example, this candle touched the market support level. You wait for 15 minutes or 30 minutes. The second candle appears. If the second candle appears above that support level, that means market is going to go for the buy trend. Market is going to go up. So you have to wait for next candle. This candle appear, you make the trade, and market will go up. Then we will go to the middle level of Bollinger Band. The middle level of Bollinger Band is very interesting. It will work as a resistance and as a support level on same time. Whenever the market, because this is a weak point, this is not much stronger than the below level or on the top level of the Bollinger Band. This line is a little bit weak from all those 2 lines. So whenever the market is moving below that level, you can see here the market touch that red line. That means that market is getting resistance. Ball has touched the roof. So market is getting resistance. You wait for the next candle. Here you can see market touched that line, and the next candle appear. You see the next candle has appeared below that line. You have to wait for one candle. You don't need to rush. The next candle, if the next candle appears below that red line, that means market is getting resistance from the roof. From that red line, it will go down. You can see here the downtrend. And sometimes you can see the market break that red line. You wait. Here is the candle appears on the red line. The next candle you can see appears on the top of that red line, not the below. Above of that red line. You can wait for the next candle, and if the next candle appears above that red line, that on that specific case, this red line will start acting as a support level, same like this, because this will indicate you that market has break that resistance level. So market is going up. So now, because of the breaking, you have the conclusion that buyers are in more powerful than the sellers. So now this line will start acting as a support level. Here you can see it will push the market up. Now we'll go to the top level of the Bollinger Band. If the market touch the top level of the Bollinger Band, it will start working as a resistance level, same like the red line. If the candle will appear down below that line. So whenever the market is moving on that specific top line, you need to wait for the next candle. If that line didn't break, if the market, because this has much more power than the red line. On that level, resistance is much more stronger than the resistance on the red line. So there's a hard chance to break it. So whenever the market is moving around that line, above line, the next candle appears. If the next candle appears below this line, then you have a clear prediction that market is going to go for the sell. This is the time for the sell trend. You can see here. You can see market touch this level, this work as a resistance, market start getting downwards. This is not the only indicators which can give you the clear prediction. Sometimes Bollinger Band will give you the prediction about 50% or 60%. For getting more accuracy, for getting more best prediction, you need to apply some other indicators. Not all, but some other and more powerful indicators. And another thing about the Bollinger Band, you can see sometimes Bollinger Band is squeezed. Sometimes Bollinger Band start getting squeezed. This means on that specific time, you don't need to go for the trade, because whenever the Bollinger Band is squeezed, candles or start making in the sideways. There is no trend. Market will not go up, market will not go down. It will start making a sideline candle in a sequence. So if you apply any trade during that squeeze duration, the squeeze duration of Bollinger Band, it will not give you profit, but it can give you some loss. Not that much loss, but it will give you some loss because of the spread level or other commission of the broker. You will get some sort of loss because market is not going up or the market is not making any trend, buy or sell trend. So you have to wait for the Bollinger Band to expand. Here you can see, here's the great example. Market is moving sideways, Bollinger Band is squeezed. Then you wait for some time, Bollinger Band expand itself. So when the Bollinger Band expand itself, it start going upwards. Here you can see it start making the trend of buy. These are the three things you need to know about the Bollinger Band. The second indicators which I use is moving averages. I use 4 moving averages. I will tell you. First moving average I use is 200, moving average of 200. What that means? Moving average of 200 means it is a moving average of previous 200 candles. Previous 200 candles give you the support and resistance level of previous 200 candle. The second moving average which I use, from here you can change the input or length of the moving average. The second moving average I use of 100 means it will give you the data of previous 100 candles. So you can get the support and the resistance level of previous 100 candles. And the third one is 50. Why I'm changing the style? Because it will separate. All of them will not be able to appear in the same color. And the fourth moving average is the 20 moving average. It will give you the data of previous 20 candles. So here I change the color. Yeah. The most powerful moving average is 200, then 100 come, then moving average of 50, and then 20. Whenever the market is moving on the moving average of 200, here you can see the market is moving above the moving average of 200 is very strong. So by applying the Bollinger Band, if the Bollinger Band is also indicating you that market is getting resistance, there is another resistance come here. You can see the resistance of 200 moving average. So it will give you more assurity that market is getting more stronger resistance on that level, support on that level. So it will go up if the market is moving above that moving average of 200. Here is the example of the moving average of, you can see, is the example of the moving average of 100. If the market is moving around, here you can see there is no the Bollinger Band. Market has break down the middle level of Bollinger Band. So what will give you the prediction now? Either the market will go upwards or market is getting resistance or support. Here you can see the moving average of 100. What will tell you? Here you can see market is moving below that moving average of 100 is a strong moving average. So it means market is getting resistance from the buyers. So market will go down. It will be very hard for the market to break the moving average of. So here is the example. If the market is moving around the moving average of 100, wait for the next candle. If the next candle appears below, so go for the trade of sell. If the market is moving above that moving average will start working as a resistance, wait for the next. And if the next candle also appears on above level of that moving average or support level, so market will start acting as this moving average will start acting as a support. Market will go up. This is all about support level and the resistance level of the market. Here's the example of the moving average. You can see market is getting resistance from the support level of 20. Market start getting down. Here's the example of moving average of 50. You can see market is acting as a support level. Market, it will go up. So these moving averages will give you more perfect analysis and more perfection about your prediction that market is getting more stronger resistance or much stronger support on that specific level, combining with Bollinger Band. The third indicator which I use is Stochastic RSI is very interesting and very important indicator, which will give you very much accurate information about the market. So in the Stochastic RSI, there is a level of 100 to about 20. Market will move around the level of 100 to 20 or 100 to 10. The down level is 10, the highest level, the lowest level is 10, the highest level is 100. Whenever the market is moving around the level of 180 means that market has been overbought. The sellers has, the buyers has overbought the market. So whenever the market has overbought, market will correct itself and it will go down. For that prediction, you need to wait for some time. Whenever this red line intersect the blue line and start moving on the downwards direction, so there is another indication, there is another confirmation that market has been overbought and market will correct itself and start getting down. 100 to 80 level means overbought level, and when the market is moving around the level of 20 or 10 to 20 or 30, that means market has been oversold. Sellers has oversold the market, so there is a time for the market to correct itself. Market will not go so madly without any limitation. Market always correct itself. So whenever the market is moving around 20-30 level, you need to wait for the intersection. When market intersect a red line, intersect blue line, and start moving upwards, so that means market is oversold. So now the market is correcting itself. You need to wait for the intersection. Before intersection, never go for the trade. Intersection means that it will start making a trend. The fourth indicator is Ichimoku. I will not always use this indicator, but if you are new, then it is important for you to understand. Ichimoku cloud, I will tell you just one thing about Ichimoku cloud. Ichimoku, whenever the market is moving within the Ichimoku cloud, then you need to wait. This is not good for you to go for the trade because market will go sideways, just like a squeeze of Bollinger Band. Same like in the Ichimoku cloud. Whenever the market is moving within that cloud, wait for some time, let the market break that cloud. Whenever the market start moving upwards or downwards on that cloud, above level of that cloud or below level of that cloud, then you will go for the trade. Either it can be a buy trade or sell trade. So these are the four indicators which I have explained you. These are enough. It will give you the best prediction. It will give you the more efficient and more fruitful prediction, except using these trend lines. Some people will start making some lines. Might be they are making any blueprint of building or their architecture. This is not how trade work. You can't draw a line. For example, if I draw a line, what that means? This is not indicating anything. These indicators will give you the previous market data, will help you to figure out how market react on that point. These trend lines will not give you any kind of information. So stop using or stop buying that knowledge that trend line will work and trend line will give you the trend information. No. Using indicators like Bollinger Band, moving averages, statistics RSI, Ichimoku, volume also. Volume will indicate you about the current value of buyers and sellers. These are 3 or 4 indicators which will give you 90% accuracy on your trades, and that is enough. Combining this technical knowledge with the fundamental knowledge which you can get from the news. If any good news come, go on the technical analysis, open a chart, apply these indicators. If these indicators are also giving you that knowledge or prediction that market is going up, so both indicators, technical and fundamental, are same on that prediction, go for this. Sometimes fundamental will not work, technical always work. For example, and sometimes fundamental has more power than the technical. For example, on the day Russia's invade Ukraine, on those days I love to trade on the crude oil because crude oil is performing very well. So I go for the trade, I open the chart of the crude oil. Crude oil is going great. It is giving me the indication that market will go up, because through technical analysis is giving me the prediction. Because without having any big news or without having any big event, technical analysis always work, because business will work as usual. So I perform the technical analysis giving me the prediction that crude oil is going up. Then I go for the fundamental analysis, I open the news, and then suddenly the news appears that Russia has invaded Ukraine. So I have the knowledge. I understand that if the Russia invade Ukraine, that means this is a very bad news. Russia is a big exporter of crude oil. So crude oil will get the price of crude oil is going to be down because Europe and America is going to impose some restriction or some bans on. So there's a huge there's a possibility to for a huge downfall in the economy of Russia, and the economy is mostly based on crude oil. So if the economy is going down, the value of crude oil will also go down because Russia has supply, because market will work in the method of supply and demand. If the supply is limited and demand is very high, then market price will go up. Here in the case of Russia and Ukraine, supply is as usual. Russia is you can say Russia is pumping the crude oil every day, same, but the supply, the demand suddenly goes down because European countries and America has imposed a restriction that we are not going to buy the Russia's crude oil. So supply is high, demand is low, then there is a perfect chance for the downfall in the price of crude oil. So by using all this knowledge, I just use the fundamental analysis instead of technical analysis, because this is a very big news. If there is a normal time Russia didn't invade Ukraine at that point, I will go for the technical analysis and buy the crude oil. But there is a big news, so I go for the sell, because on that point technical analysis is not going to work, because fundamental analysis has more power. This is all you need to understand. Sometimes technical analysis, if any big news didn't come but business is going as usual, go for the technical analysis. Also use fundamental analysis, it will give you some indication. And anyhow, once any big news come, any important news come, then also apply technical analysis, but rely on the fundamental analysis. These are two things. If you understand and if you learn in your trading profession, you can become a great and successful trader. Don't rely on any trading signal. Don't rely on any coach or any relationship manager. They will not going to make you successful trader. If you want to become a successful trader, you need to learn, you need to educate yourself, and you need to understand the philosophy and psychology of the market. And using those technical indicators and using those knowledge and skill, you can predict a 80 to 90% accurate and best prediction for your upcoming trade. Thank you so much for watching this video. I'll make sure to make such kind of videos to educate you and to give you more knowledge about the trading industry and how you can become a successful trader. Thank you.